All right, it is 1:05. I think we can get started. A couple more people might trickle in, but here we go. Thank you so much for being here. This is one of a couple of our Partners in Growth event series, which is like our education webinars on either tax or accounting topics. And today we are talking about 1099s and W-9s in this information workshop. Before I get started, I'm just going to introduce myself. I am Emily Slade, and I am a senior tax associate here at Apex. I've been here for a couple years now. And this fun little picture is me and our tax manager, Bethany Bialis, at our 25th anniversary party just a couple weeks ago. So it was really fun getting to see a lot of you there and celebrate. So if you attended, thank you for coming. All right, let's jump right in. So what is a 1099? The question of the hour. So it is a form that's a record of what an entity or person or someone other than your employer gave or paid you money if you're receiving one. So the payer, which would be your business in this case, fills out the 1099 and would send copies to you or the person receiving the money and the IRS to report the income. There are so many types of 1099s. We could fill up multiple slides, but these are just some of the most common. So the NEC, which is the non-employee compensation, INT for interest, DIV for dividends, G for unemployment, either local, federal, or state unemployment paid to a person, and then miscellaneous. If you have any questions, also feel free to throw them in the chat, or at the end, we can do kind of a Q&A, but David is monitoring the chat right now as well. So why does the IRS require 1099s to be issued at all? It is the verification method within the IRS. And who's going to know, if you're paying cash, who's going to know that you've made these cash payments? Well, your business tax return requires you to disclose this information. There are two questions that we answer on your tax return. One says, were you required to send 1099s? And if you were required, did you? So if you were required to and did not, that is telling the IRS right there on your tax return, I did not send the 1099s I was supposed to send. And then you want to send your 1099s because one, that is the rule, that is the law, but also there are fines. So it can range anywhere from $50 to $570 per form if the IRS deems that that requirement has just been intentionally disregarded. So it doesn't seem like too much, but if you have 50 or 100 1099s that you're sending in your business, that amount is per form and can add up quickly. So it's better to be in compliance than not. Now, who gets a 1099, NEC, miscellaneous, and who does not? So the people who do are anyone that you send a cash payment to for services of $600 or more annually to any non-corporate vendors or providers. So anyone you pay for services that is not your employee and not a corporation. So some of the most common examples are compensation for personal and professional services. So this is not an extensive list, but a lot of common personal and professional services are consulting or coaching, cleaning, notary, speakers, any maintenance that you have done. Then rental fees is another big one. So anything you're renting for equipment or lodging, your building space or office space. And that also includes any banquet rooms. So that would be a rental 1099. Advertising is another good one to point out because even if the ads are created by the vendor, it's still a service. So any billboard ads or display ads. And then attorneys is another good one to point out because regardless of the form of entity, whether they're a corporation or not, an attorney does get a 1099. So who does not get those 1099s? So any payments to corporations or to your employees. If they're receiving a W-2, they do not also get a 1099. But then also any payments that are made with credit card do not require a 1099. So it's cash only. I just want to stress that. So if you're using your credit card, that gets reported a different way. So you do not have to send a 1099. And then other payments that do not require a 1099 would include utilities like telephone, gas, electric, cable, any merchandise where the service portion is included in the purchase price. So that includes installation, training, tech support, And an example of that would be if you bought, a massive piece of equipment and that equipment came with the service of installing it and maybe 6 hours of training on that machine, that would not require a 1099 because it's part of the machine that you purchased. Food or meals that are not catered or not a part of a banquet. And then, of course, goods or supplies. Anything that you're physically purchasing would not require a 1099. So we've talked a little bit about employees versus contractors, and how do you determine that? If we're going to go through these 4 important factors, and if after that you're still wondering, is this person a contractor? Should they be a W-2 employee? Please reach out to us at Apex or your client advocate. We can definitely help you determine that. But the first factor is going to be control. So an employee, their schedule is usually provided to them by the employer, and the employer would dictate how, when, and where the work is completed. So really controlling that schedule. Where an independent contractor, they would determine how and when their tasks are completed, and they usually have a goal to reach, and they can get to that goal how they see fit. The next factor is exclusivity. Generally, employees spend 100% of their time working for one employer. Now, there are, some people have more than one job, but overall, generally, they have one employer. Where independent contractors almost always are working for multiple companies or individual businesses at the same time. So they might have a couple contracts with this person and a couple with this one, but they do not typically spend their time working for one person. The third is training and equipment. So the employer is responsible for training and providing any necessary tools to the employee. So for example, if you hired someone and you buy them a computer and all of the training to do their job, you sent them to, a 20-hour training on how to do this, and you're providing that to them, they would be an employee. Whereas an independent contractor, they're responsible for all their own training and education, and they usually have their own tools and equipment. So my good example is if you hire someone to come build you a house, if you provide the hammer, the nails, and all the other things for them, and you send them to a training on how to do this, they would be your employee. But if they show up, they already have this experience, they already know what to do, they have all their own tools in their truck, and they come just to show up and build the house, they would be their own independent contractor. And finally, the last factor we'll talk about is compensation. So employees are often paid a salary or an hourly wage and are typically eligible for benefits if they're a full-time employee. Whereas an independent contractor is often paid on a specific contract or a fee discussed between the contractor and business, and they are not usually eligible for benefits that are provided by that employer. So we're talking about all these things. Isn't this easy? It seems simple enough. How much I paid them, send them a 1099. So it is, and it can be. The simplicity of filing 1099s is just reliant on your record keeping and how organized you've been throughout the year. So this information it seems minimal, and it is minimal, but it can be really complicated to try to do retrospectively. So if you had someone work for you, a vendor in February, now it's November, it could be really tough to go back to that vendor if you haven't used or talked to them since February and say, hi, I need you to give me this, this, and this so that I can send you a 1099 in a couple of months. So the best practice would be to go throughout the year, identify those vendors, and obtain W-9s, which we'll talk about in just a second, and to continuously track all of your cash payments. So at the end of the year, you just have to pull that information, send it over to us, and get your 1099s filed seamlessly. So what is a W-9? This is the request for a taxpayer identification number and their certification. So this is just kind of the first little chunk of the W-9, and it shows their name. If they have a business name, they'll fill that out. But if they're just a person, like an independent person, not a business, they wouldn't have a business name. Then this box 3 is really important because it tells you what form of entity they are, and that will really tell you whether or not you need to send them a 1099 or not. There's really no good way to know 100% what type of entity someone is unless they told you or you have it here on your W-9. So an individual, sole proprietor, or single member LLC, they would require a 1099. but the C Corp and S Corp, they would not. So you want to get this form back so that you can have all the information you need, but you also know whether or not you need one. So you could receive a bunch of W-9s back and not have to file any 1099s if they're all C or S Corps. At the bottom of this form, it also has their address, city and state, and just some other good information you'll need for the form. This second part of that W-9 is kind of the bottom half. It says part 1 and 2. But in part 1, you'll either get their social security number or their EIN. So if they're an individual and they don't have an EIN, their social is fine. But if they have an EIN, they would enter it there. Then they would sign and date it, and you would keep this for your record. Some W-9 best practices. So you'll want to require the vendor to fill this out before they begin working. It's the easiest way to make sure you get the W-9 filled out. If you incorporate it into your engagement process before they begin the job or begin the work they're doing, you can really save yourself some time on the back end trying to retrospectively get it. Also, another good practice is to save your W-9s to a shared drive. You could call your folder like active vendors. And once you have one, you do not have to ask for one every year. If this is a vendor you use all the time, every couple of months, you can keep that W-9 active. The only reason you would need a new one is if something changed. So if 1 year this person is using their social security number, they're just a single member, but then the next year now they have an EIN and a full business setup, then you would want to receive a new W-9 and they should inform you of this change, and then you would have the most up-to-date information. So if you cannot get a W-9 from someone, you have asked and asked and asked, you want to make sure you're documenting those requests, that you have that on this date, I asked this many times, and then you can kind of move on from there. But in order to file that 1099, you have to have their full name, address, federal ID number, which could be an EIN or social, and you have to know what form of entity they are. So that's why it's just all the information from the W-9, so it's easier to have that form and to know exactly what you need to be filing. A little bit of extra credit on some other 1099 forms. So the DIV, which is the dividend statement, this can be used by corporations to report dividends and distributions to shareholders. For C Corps, dividends that are paid out to shareholders are reported using this form, and any distributions received from C corporations require a 1099 div. Now, you might in your personal life receive a dividend statement for more than just these things. If you have dividends or investments, you might receive dividends, and then you'll receive this form at the end of the year. But for businesses or corporations, this is typically the types of income that are reported would be dividends, distributions of capital gains, and distributions of liquidations. The biggest difference between a 1099 DIV and a 1099 NEC or miscellaneous is the minimum amount to be reported is $10. So whereas the NEC, you don't have to file a 1099 unless it's over that $600 mark, here it is $10. Same thing, but a little different. The 1099 INT is simply for interest. So it's used to report any interest income during the tax year by any person or entity. And it can be used to pay interest income for investors at the tax year end. Some examples would be interest from shareholder loans or seller financed mortgages. And same thing with the div, the minimum amount reported is $10. So for our Apex clients, what is different about this year? So not much. Last year, we had a brand new process and it was very successful, but we do have a couple of tweaks that we just wanted to mention here. So last year, we were really trying to get those email addresses for vendors. And we still would advise that you use email addresses because it'll get sent to the vendor quickly and you'll know immediately if it's bounced back or if the vendor wasn't able to access it. Unlike in the mail, if they don't receive it, you really won't know. But this year, if you have the email addresses and they get sent over to us, that's what we will use. But if not, we will mail them to those vendors. And then also with emails, last year we had a couple questions on where that email was coming from, if it was safe to open. So the vendor email with their 1099 will come from Avalara, which is our 1099 software. So just make sure your vendors know when they receive the email from Avalara, it is safe, good to open, and it is their 1099. So what do we need from you? Kind of the steps this year. So the first step would be to sign and send back the engagement letter, and these will be sent out tomorrow after this webinar is concluded. And then second, to fill out our Apex input template. It'll look very similar to last year. You'll receive an email sometime in December, either from me or one of our team members, where your input template will be, and you'll also receive a secure link within that email to upload it. What a good best practice would be in December to start entering your vendor information. So if you have their name and their address, EIN, all that information from the W-9, you can start incorporating that into your template now. So in January, when we have that tight timeline, all you have to do is pop the number in there. But then once your year end is closed and all of your amounts for cash payments are done, you can enter that amount and then send over the input template by uploading it to the Ignite link that you received in that email in December. And you'll get a couple more reminders of this, so don't feel like you need to know it all right now. But just to give you a little synopsis of what will happen in the future, we will send some more reminder emails out when that comes. Awesome. Well, thank you so much for joining us. And if you have any questions, please feel free to ask now, or, if you think of them later. My email address is eslade@apexcpas.com, or please feel free to reach out to your client advocate as well. Thank you so much for coming.